So, very good evening, participants. Today we will start with the PUFE transactions. Because as we know, when a company goes in for IBC, definitely in most of the cases there is diversion of funds, and that diversion of funds is basically through PUFE transactions: preferential, undervalued, fraudulent, or extortionate. So this is an important topic, and we have started with this topic because even if you have not even read one word of IBC, still you can, through common sense, understand what are these transactions. So let me share my screen with you. And I think I have already shared with you the PPT in the morning. I have already shared with you the case studies which we discussed in our last batch, which was in December. So whenever you find time, you can go through those case studies. We will be developing some new case study also. And I have shared with you the link of my YouTube channel, syllabus wise, item wise. And there are more than 100 videos covering 150 hours of video recording. So you can also go through that material whenever you find time. And this session is being recorded, and you will be provided the recording as well. In case you are not able to attend a particular session, so recording is also available. And I hope my screen is visible to you.
Not yet, sir.
Okay. Yes, now it must be visible.
Yes.
Okay. So I think we can start from here. These are my details. My mobile number, my email ID, my website address is also there. On my website also, there is sufficient material. Even bare acts are there. On the left hand side, you will find an icon, IBC 2016. And from there, you can download the various laws. But before we start with our session, let us understand what IBC is basically. So there are two sides of the coin. On one side is the central government, and on the other side, on the parallel side, is the Supreme Court. Central government, by way of notification, they notified a regulator. This regulator is Insolvency and Bankruptcy Board of India, summarily referred to as board. So whenever we are referring to board in IBC, board here means IBBI, not the Central Board of Direct Taxes as we refer to in income tax. IBBI, it has got its own website, ibbi.gov.in, wherein you can download the various circulars, notifications, regulations, rules, circulars, everything. Now, this regulator, IBBI, is regulating whom? IBBI is regulating the insolvency professionals, the insolvency professional entities, the insolvency professional agencies, and information utilities. And who is regulating IBBI? Central government is regulating IBBI. So IBBI is regulating insolvency professionals and insolvency professional entities. Insolvency, to become an insolvency professional, first of all, you have to pass the limited insolvency examination. Almost all of us are preparing for appearing in this limited insolvency examination, which is 2 hours examination, multiple choice questions. Focus these days is on case studies. That is why we've assembled here to discuss the various case studies. Once you pass the limited insolvency examination, then you can undergo 50 hours of training mandatorily with either of these three agencies, which are the insolvency professional agencies: IIPICI, IP, AICMAI, and ICS-IIP.com. And once you pass the exam, you undergo this 50 hours of pre-registration course. Then you have to enroll yourself with IPA and you have to register yourself with IBBI. For enrollment, you have to pay a fees. For registration, you have to pay a fees. But registration is discretion of the IBBI. Even if you pass the exam, even if you undergo 50 hours of mandatory training, still IBBI may refuse to enroll you in case your CIBIL score is not good. So CIBIL score, if it is below 600, then you are running a risk. Once you become an insolvency professional, you can assume various roles. You can become an IRP, you can become an RP, you can become a liquidator, you can become a bankruptcy trustee, you can become administrator, you can become authorized representative. So there are definite lot of opportunities once you become an insolvency professional. And besides that, if you do not want to take authorization for assignment, you can even go in for consulting. The three agencies are promulgated by the three institutes, CA, CS, and ICWA. And these agencies, they regulate the professionals and insolvency professional entities. Earlier, insolvency professional entities were not being registered, but now even insolvency professional entities are being registered, although that is not in our syllabus. The cutoff date for our syllabus is 28th of February 2022. And any amendment which has taken place after 28th February 2022 is not in our syllabus. Whenever IBBI wants to change the syllabus, they have to notify 3 months in advance. As of today, they have not notified. So it means the syllabus is going to stay up to 16th of April at least. So even by end of April, you can assume, safely assume. So you have to mentally prepare yourself to appear and pass the exam maximum by March. I think this batch will be over somewhere by first week of February, and in the last week of February or third week of February, you can start your aim for appearing in the exam. Another entity which is being regulated by IBBI is the information utility. Information utility is basically a repository of financial information. And there is only one information utility as of now, NESL, National E-Governance Services Limited. And the website is nesl.co.in. Whenever you take a loan, whenever you pay a loan, whenever you create a charge, whenever a charge is satisfied, all this information, after corroborating the same from the borrower or the lender, is fed into this system. And in due course of time, they are thinking that NESL will be the only provider of financial information, and you need not even furnish the documents, loan documents, or creation of charge or satisfaction of charge. They will be accessing this information through information utility only. But till the time this system is stabilized, they are asking for information from the parties concerned. So this is one part of IBC. Another part is the Supreme Court, and Supreme Court, below the Supreme Court is the appellate tribunal, NCLAT and DRAT. High Court has got very limited jurisdiction, and below these appellate tribunals are NC adjudicating authorities, NCLT and DRT. NCLT is basically entertaining applications on behalf of corporate debtors, and DRT on behalf of individuals and partnership firms. Normally, three types of applicants are there who can move a petition before NCLT or DRT: financial creditor, operational creditor, and corporate debtor. And in case of individuals and partnership firms, even this distinction between financial creditor and operational creditor disappears. So there is only one type of creditor and one type of debtor. So this basic information, I think most of you must be already aware. Now this relevant sections for this PUFE transactions: preferential, undervalued, fraudulent, and extortionate. Section 5, subsection 24 is a very important section which talks of related party, and 524A, it talks of the definition of relative and what is covered and what is not covered in relative. Whenever we read a section, we have to read not only what is contained in the section, but what is not contained, because most of the time you will be getting negatively worded questions. So you have to particularly check what is not written in that particular section or subsection. Then 43, it talks of preferential transactions and relevant time. 44 is orders in case of preferential transactions. 45 undervalued. 46 is relevant period. 47 is application by creditor in case of undervalued transactions. 48 orders. 49 is defrauding creditors. 50 extortionate. 51 orders in respect of extortionate credit transactions, and 66 is for fraudulent trading or wrongful trading. So these are the sections which we will be covering today. First of all, the concept of related party. Related party, as we know, all these persons are covered. First is directors, partners, or their relatives. And this related party is in relation to a corporate person. So if we read it from the Bear Code, it says that related party in relation to a corporate debtor means. So it says related party in relation to a corporate debtor, in relation to a corporate person, in relation to a corporate debtor, in relation to a corporate debtor. So this is in relation to a corporate debtor, 524. And what is included here? Director, partner, or their relatives. It means if you are a director in a company, if you are a partner in an LLP, or you are a relative of the director or partner. So what is not covered here? If you are an accountant in a company, you are not a related party in relation to a corporate person. If you are a supplier to a company, you are not a related party. So side by side, you have to think what is not covered also. Then key managerial person or their relatives. So key managerial person also has a definite definition as per Companies Act. So key managerial personnel or their relatives. It means the ordinary employees are not covered. LLP, partnership firm, where director, partner, or manager or their relative is a partner. So first two are in relation to a company. Now this is in relation to a LLP. So LLP, partnership firm where director, partner, or manager or their relative is a partner. So these words, director, partner, or manager, they are in relation to the corporate person. So any LLP in which a director is a partner, any partnership firm in which any director is a partner. So you have to read like this: any LLP in which a partner, LLP in which a relative of the partner is there, any partnership firm. So accordingly, you have to read these things. Then private company where director, partner, or manager is director. This word director is very important. So if you and holds, so two things are required. One is director and another is holding of 2% share capital along with relatives. So in case of a private company, even if you are holding more than 2% means even exactly 2% is not covered. So you have to read each and every word very carefully, because the questions they are framing in such a manner that they try to create confusion in the minds of the student. So he says private company where director, partner, manager is director and holds. So first of all, you have to ask whether the person which we are considering is a director and holds more than 2%. In case it is an LLP, whether it is a partner or manager. In case of company, you have to see the director or manager. So private company where the director, partner, or manager is director and holds more than 2% share capital. So if you are seeing it this relation in relation to a particular company, suppose company XYZ is in CIRP. Now you are judging this relationship in relation to XYZ Limited. So a private company where any director of XYZ is a director and holds more than 2%, then this person will be considered to be a related party. Suppose there are two companies, XYZ Limited and ABC Limited. Now, in ABC Limited, there is a person who is a director of ABC, and that director, along with his relatives, is holding more than 2% in XYZ Limited. Then ABC Limited and XYZ Limited are considered as related parties. But suppose in ABC Limited, there is an employee. He is not a director. He is not a manager. He is an accountant, say, and he is holding more than 2%. Even then, he will not be considered to be a related party. So in private company with which you are seeing the relation, it has to be either director, partner, or manager. He should be a director and holds more than 2%. So directorship here is important. Then public company where director, partner, or manager is director and holds more than 2%. So the other relation, it could be either private company or it could be a public company. But there is a slight difference here. In case of private company, it says it's share capital. And in case of public company, it is saying more than 2% of its paid up capital. So there is a slight distinction that in the case of public company, it is saying it's more than 2% of its paid up capital. And in case of private company, it is saying more than 2% of its share capital. Then body corporate who acts on advice, instructions of director. Basically, all these relations, if you see closely, then you have to see each and every relation. Basically, these are persons, related parties are persons who can influence decision making, either by virtue of holding share capital or by virtue of being in the decision making. And we know by common sense also that directors, partners, managers, key managerial, or even their relatives, they can influence decision making. So they can influence a company in some way or the other. So that is why this concept of related party is there. And why we are reading this concept? We are reading this concept because in relation to PUFE transactions, there is a certain look back period for transactions with related parties. Because if a transaction has been done with a related party, there is more probability of getting influenced in a business decision as compared to a person who is not a related party. So that is why we are reading this concept. Person who controls more than 20% of voting right, person in whom corporate debtor controls more than 20% voting right. So anything by way of voting rights, by way of share capital, by way of influence in decision making. So these are the persons who are covered in related parties. Now, related party in relation to an individual, because in case of related party in relation to a corporate debtor, we were seeing the relationship of these persons with the company. So there is a company, so you have to assume in your mind that there is a company XYZ Limited, and then you have to see each and every clause from A to M, okay, what type of influence such persons could exercise on the company. Section 524A talks of related party in relation to an individual. So in relation to an individual, naturally, it could be either a company or it could be a person who is a relative of the individual or a relative of the spouse of the individual. Then a partner of a limited liability partnerships, and all these you can go through. And now there are some relations also for the purpose of this clause. A relative with reference to any persons means one person is related to another by either they are members of HUF. So if there is an HUF, all the members are considered to be related to each other. Husband, wife, father, mother. So all these are relations, basically lineal ascendants and lineal descendants. And wherever the relation is that of a son, daughter, sister, or brother, their spouses shall also be included. The resolution professional shall submit. Now, why we are reading this? Because it says the resolution professional shall submit, because this is part of the regulations. The resolution professional shall submit to the committee all resolution plan. A resolution plan, as we know, is some sort of plan which has been put forth by a new promoter to extricate the company from the financial mess it has entered into.
హోంవర్క్ ఏం కాదు హోంవర్క్ చూసుకోండి అయిపోతుంది
So I'm muting all because there is a lot of disturbance. Okay. So it says that the resolution professional shall submit to the committee all resolution plan. The resolution professional is a person who is an independent, regulated professional who has passed the limited insolvency examination, who has undergone 50 hours of pre-registration annual course, and then he has enrolled himself with IPA or and registered with IBBI. This resolution professional is presenting to the committee. A committee is basically consisting of the financial creditors who have invested money in the company, and now they are taking the decisions on behalf of the company, and the role of board of directors is suspended for the time being. All resolution plan. This resolution plan is nothing but a plan put forth by the new promoter who wants to take over the company, which comply with the requirements of the code, and along with details of the following transactions, if any, observed, found out, determined by him. So at the time of putting up this resolution plan, which is approved by the committee, the resolution professional will observe, find, and determine these types of transactions: preferential transactions, undervalued transactions, extortionate and fraudulent transactions. Because it is presumed that if a company has gone in for IBC, so there is a high probability that such type of transactions might have taken place. So that is why a special emphasis is being put on these transactions, and the onus is put on the resolution professional to find out whether there are any such transactions or not. In case he does not report, any other party can also report such type of transactions to the adjudicating authority, which is NCLT in case of corporate persons. And the committee shall evaluate the resolution plans as per evaluation metrics, record its deliberations on the feasibility, and vote on all such resolution plans simultaneously. Now, by way of this chart, we can understand that this is the CD which is undergoing CIRP. There is an associate company, holding company, and subsidiary company. And there are two types of persons either exist. हाँ जी, वैभव गुप्ता जी, please.
सर अभी आपने मेंशन किया कि any other person can also report such kind of
yes
transaction.
Yes. Means either the creditor or the promoter, they can also report the transaction. Suppose basically it is the duty of the resolution professional or liquidator to report such transactions to the adjudicating authority. But suppose the resolution professional is also hand in glove, he has favored his relative. So in this case, he will not report the transaction. So in this case, either the creditors or even the management, they can also report the transactions to the adjudicating authority.
तो ये creditors, operational creditor, financial creditor कोई भी हो सकते हैं.
Any person who is a stakeholder. Any person who is a stakeholder.
अच्छा. Which section are we reading, sir? ये वाला?
कौन सा?
ये जो हम लोग सामने देख रहे थे, ये कौन सा सेक्शन था सर?
ये सेक्शन तो 30 है बेसिकली. This is section 30. हाँ.
अच्छा, ठीक है.
But we will read about the reporting of transactions by outsiders in वो 43 से जो sections है ना PUFE transactions का, we will be reading those related. Now this illustrations for related parties, holding company, then subsidiary company, all these are also covered in the related parties. You can go through all this. Now, these avoidance transactions, these are also called avoidance transactions, PUFA transactions. So these are pre-insolvency transactions, because as we know, as soon as an application is admitted by the adjudicating authority, that is NCLT, which is the insolvency commencement date. So there is a look back period. In case of a related party, this period is 2 years. So that is why the concept of related party is important in case of PUFA transactions. And in case of unrelated persons, it is 1 year. So these are the pre-insolvency transactions that should be cancelled or avoided during the CIRP to maximize the value of assets available to the creditors. Suppose a company has undertaken some transactions with related parties. Now, once they are reported, their effect has to be reversed as per the orders of the adjudicating authority. Suppose they transferred some property. So that property has to come back to the corporate debtor. So these transactions should be cancelled or avoided. So once CIRP or liquidation process has been initiated, the RP or liquidator is to investigate the affairs of the corporate debtor and to scrutinize the books and records of the company and look through transactions of the corporate debtor to see whether any such transaction can be termed as avoidance transactions, because it is the basic responsibility of the RP or liquidator. And in case RP or liquidator determines any such transaction, he must file an application for avoidance of transactions before the NCLT. Section 43 says that the liquidator shall apply to the adjudicating authority for order for such transactions, and if liquidator is of the opinion that CD has executed a preferential transaction. Now, what is this preference? This CD shall be deemed to be given a preference if there is a transfer of property. So first of all, there should be a transfer of property for the benefit of creditor, security, or guarantor. These are the three beneficiaries. He might have transferred the property to some creditor or security or guarantor for any financial debt, operational debt, or any other liability owed, and such transfer puts the creditor, security or secured creditor or guarantor in beneficial position in the event of distribution of assets, because he is undertaking now, this CD is undertaking some transaction which is regarding this transfer of property, and it is for the benefit of creditor, security, or guarantor for any financial debt, operational debt, or other liability. And such transfer, it puts, just a minute, let me open section 43. See extra. Security. So he is transferring the property for the benefit of creditor, surety, or guarantor. And such transfer puts the creditor, surety, or guarantor. The word is surety actually. Suppose there was a supplier of goods. This company is a real estate developer. In lieu, because he could not pay to the operational creditor for supply of goods and services, he agrees to allot him a flat in lieu of the payment. Now, this character has changed from operational creditor to financial creditor, because home buyers, as we know, are treated as financial creditors in IBC. So this change from operational creditor to financial creditor will put him in a beneficial position, because in the event of distribution of assets, as per waterfall mechanism in section 53, he will be having a better position. He will be earlier in the position. So in the event of distribution of assets, if such transfer puts the creditor, surety, or guarantor in a beneficial position, then it is deemed to be a preferential transaction. But this preferential transaction, it does not include the transfers made in ordinary course of business and any transfer creating security interest in property acquired by CD, provided that such security interest creates a new value. What it means? It means that, okay, there was a financial creditor. We have availed from him 100 crores of loan. Now we are giving him additional security. But in lieu of that additional security, we are getting, say, another 50 lakhs. So if it secures a new value, if such security interest secures new value, then it is not deemed to be a preferential transaction. But suppose there is a financial creditor, we have availed 100 crores of loan from that party, and now we are giving him additional security without getting anything in return, then it will be treated as a preferential transaction. So if it secures new value, then it is not a preferential transaction. But if it does not secure a new value and we are giving him some additional surety, we are giving him some additional guarantee, we are putting him in a better position, we are converting the operational creditor into a financial creditor, then all these transactions will be treated as preferential transactions. But in case of security interest which secures new value, such transfer should be registered with the information utility on or before 30 days after the creation of charge. So in this case, if such transfer was registered with an information utility on or before 30 days after the corporate debtor receives possession of such property, then also it will be not treated as a preferential transaction. So for preferential transaction, what we have to see, whether it is giving some preference, whether the priority of payment is undergoing a change because of this transaction, whether it is securing some new value, or it is an ordinary course of business. So based on all these parameters alone, we can judge whether this transaction is a preferential transaction or not. So there should be a transfer of property for benefit of creditor, surety, or guarantor. Any transfer under order of court is not precluded under preferential transfer. It means even if by virtue of a court order some transfer has been made, that transaction can also be challenged by the resolution professional or liquidator. Why so? Because even the courts, when giving judgments, they look to the particular set of circumstances put up before them, and they may not be able to appreciate the whole sequence of events or the fraud behind the transactions, because they might have given judgment based on the facts which were put up before them. So even if a transaction has been done in pursuance of a court order, that could also come under the umbrella of preferential transfer. It is not precluded, it means it is included. And preference shall be deemed to be given if it is given to a related party other than by reason of being an employee. Because we have seen in the definition of related party, manager, key managerial person. So if it is other than by reason of being an employee, then the period is 2 years preceding the insolvency commencement date. Or if it is given to a person other than related party, then the look back period is 1 year preceding the insolvency commencement. But these are the ordinary preferential transactions. In case of fraudulent transactions, there is no look back period, and you can even go back 10 years before the insolvency commencement. And what the order of adjudicating authority will do, it shall not affect any interest in property which was acquired from a person other than CD and was acquired in good faith and for value. So what it says, suppose a person has acquired a property from someone other than the CD. Because in this case, what is important is for section 43, to attract section 43, it must be that the transaction was done by the corporate debtor. But in case this transaction is done by some other party other than the corporate debtor and it was acquired in good faith and for value, then this will not be covered in this preferential transaction. Now regarding these undervalued transactions. What are undervalued transactions? Undervalued means you got a property, the transactions considered undervalued where either you give it for free or you give it where the consideration is significantly less than the value provided by the CD. But before we see these undervalued transactions, let us see section 44. So section 44 says, what it says, 43 says that if the liquidator or RP on examination of the transactions determines that these are preferential transactions or undervalued transactions. They may make an application to the adjudicating authority and which will declare such transactions as void. And adjudicating authority may order either to require the property transferred back to the CD or if any security interest has been created, then that security will be released or discharged. And if some payment has been made, then it will require the person to pay back the money. Section 45 talks of undervalued transactions. Undervalued transactions are there when you either give it something for free or where the consideration is significantly less than the value provided by the CD. Company purchased a property for 100 crores. They transferred it for 50 crores. So it's an undervalued transaction. And here also, in case of undervalued transactions also, look back period is same. 2 years in case of a related party, 1 year in case of an unrelated party. And suppose this liquidator or the RP, he fails to report the transaction, then any member or creditor can also make an application to the adjudicating authority. And in case this transaction was not reported by the RP or liquidator, and any member or creditor made an application to adjudicating authority, and that transaction was found to be preferential or undervalued, so in this case, adjudicating authority will not only reverse the effect of the transaction, but it will ask the IBBI to initiate disciplinary action against the liquidator or RP as well, because it was the primary responsibility of the liquidator or RP to look at these transactions. But they chose not to report the transaction, and any member creditor then they made the application, and it was found to be a fraudulent transaction or undervalued or preferential transaction, then IBBI will definitely reverse the effect of the transaction. The reversal may entail the transfer of property back to the CD. If some security interest was created, then release or discharge of such security interest. And if some payment was made, then requiring the person to pay such sum back. But it will also ask the IBBI to initiate disciplinary action against the liquidator or RP. 46 talks of the relevant
47
period.
sir, 47 के केस में who will be the appointed to judge whether that's same has been a transaction which has not been preferential है या undervalued है, इसमें भी कोई authority judge appoint की जाएगी by
all these applications are being made to the adjudicating authority only, NCLT. So NCLT is the judge. NCLT will adjudicate whether this transaction, first of all, suppose anybody can report, definitely, because there are counter allegations in case of CIRP or liquidation.
Right.
So what happens is everybody is at liberty to report to the adjudicating authority. Now it is for the adjudicating authority. Okay, whether it, first of all, they will judge whether it is undervalued, preferential, or fraudulent, or what. And once they make, then they will see who made the application. In case liquidator or resolution professional did not report, then they will ask the IBBI also. What he was doing, he is charging fees, he is a professional, he was entrusted with the responsibility of overlooking the CIRP, he was in charge of books of accounts, everything, and he still could not notice such transactions. Because first of all, this is the primary responsibility. As soon as an IRP or RP is appointed, so he appoints valuers. In case he finds something is fishy, then he appoints this forensic auditor also, or transaction auditor.
Transaction auditor तो कर देते हैं.
So 46, in 46 the related period is 2 years for related parties and 1 year for unrelated parties. Section 47, this permits the creditors, members, or partners of the CD to make an application to the adjudicating authority to set aside a transaction where the liquidator or resolution professional has not reported such transaction. Then section 48. Section 48, it talks of the orders that may be passed by the adjudicating authority. Basically, these involve the reversal of the effect. So if reversing the effect of the undervalued transaction and requiring the person who benefits from such transaction to pay back any gains he may have made as a result of such transaction. 49 talks of transactions entered into with the intention of putting the assets of the corporate debtor beyond the reach of or otherwise prejudicing the interest of a person who is making or may make a claim against the corporate debtor. So in this case, in section 49, suppose a corporate debtor or a company which is likely to go to this process, this and because they know that default is going to happen. So in this case, if they put the assets of the corporate debtor beyond the reach of, if they try to dispose of, they try to transfer, because ultimately these even if a company undergoes this CIRP process, the stakeholders will get some money either by way of liquidation or by finding a new resolution applicant. But suppose the corporate debtor did something that this property is outside the reach of the genuine stakeholders, then in this case, there is no time limit, there is no look back period. So it can go even 10 years or 5 years. And so no time limit during which the transaction must have been entered into to be challenged as a transaction defrauding the creditor. So section 49, it talks of fraudulent transactions. So in case of fraudulent transactions, there is no look back period. '50, extortionate transactions. Extortionate means actually which are say exorbitant, where any financial or operational debt during 2 years preceding insolvency commencement date is extortionate. So extortionate means the which requires the corporate debtor to make exorbitant payments in respect of the credit provided or any unconscionable under the principles of law relating to contract. So anything unreasonable. So is extortionate. Or it requires the corporate debtor to make exorbitant payments in respect of the credit provided. Suppose they are saying charging say 50% rate of interest, 10% per month rate of interest, something like that. 51, then it talks of the liquidator or RP will make the application to adjudicating authority, and adjudicating authority will order to restore or set aside or modify the terms of such extortionate credit transactions. But here, in case of extortionate credit transactions, we have to keep in mind one thing, that these credit card companies, they are also charging say 36% per annum rate of interest. But because they are regulated by a financial sector regulator, so any such transactions are not covered under extortionate transactions. But if it is a private financer, then it could be considered as extortionate transaction. Explanation, there is an explanation to section 50. It says, for the purpose of this section, it is clarified that any debt extended by any person providing financial services which is in compliance with any law for the time being in force in relation to such debt shall in no event be considered as an extortionate credit transaction. So suppose there is a credit card company which is definitely regulated by the banking sector, by RBI under its norms. So even if they are charging say 36% interest or 42% rate of interest, so they are not covered under extortionate credit transactions. And 51, it says that the liquidator or RP will make the application and the adjudicating authority may restore or set aside or modify the terms. Now regarding these relatives, so whether the following are covered in the definition of relative, because even this step brother is a brother, adopted child is a child. So maternal uncle's step brother, whether it is covered in the definition of relative or not, maternal uncle's brother. Let us go back to the definition of relative. So maternal uncle's brother, whether it is covered or not. So maternal uncle is mother's brother. So mother's brother is covered. But his brother again is not covered. Mother's brother and sister. So mother's maternal uncle is covered, but maternal uncle's brother is not. Hanji, any other views on this? But if you see this transaction from the other perspective, maternal uncle's stepbrother, whether it is covered or not. Brother, even if step is included. Yes, it is covered. He is also brother, right? Now, paternal uncle's adopted child. Let us again see the definition. Paternal uncle's adopted. So, paternal uncle's child say. So, you can ignore these words, step or adopted. So, paternal uncle is father's brother.
Not covered.
Yes, not covered. Okay. And this granddaughter son,
Covered.
so under which heading this will be covered? Granddaughter son?
11.
Yes, granddaughter, daughter, and son are covered. Yes. So for the point here is that we have to ignore this adopted or step. Now, avoidable transactions. So these are the various types of transactions: preferential, undervalued, extortionate, and fraudulent. Let us quickly go through these types of transactions. So in preferential transaction, either there is a transfer of property or there is a transfer of an interest. And property, it could be either money or goods or actionable claims, land or every description of property. It could be either situated in India or situated outside India. And every description of interest, including present or future or vested or contingent interest arising out of or incidental to property. So all these are covered. And persons with whom such transaction, because now we are discussing section 43. So section 43 says where the liquidator or the resolution professional, as the case may be, is of the opinion that the corporate debtor has at a relevant time, 2 years or 1 year, given a preference in such transactions and in such manner to any person, he shall apply to the adjudicating authority and he shall be deemed to have given preference if there is a transfer of property or an interest. So we have seen the definition of property and we have seen the definition of interest. And for the benefit of a creditor or a surety or a guarantor. And this transfer has the effect of putting such creditor or surety or guarantor in a beneficial position. And this payment is made to such person on account of an antecedent pre-existing financial debt. As I gave you the example of a supplier of goods or services who has supplied goods to a real estate developer. And now this transaction of supply of goods is an antecedent transaction. Against this transaction, now the developer allots him a flat. So this allotment of flat puts him from the position of a operational creditor to a financial creditor. So if this payment is made to such person on account of an antecedent financial debt or an antecedent operational debt, so this supply of goods or services was an antecedent operational debt. Similarly, he might have already, suppose there was a person who was holding redeemable convertible debentures. Because the company was not able to pay, now they have converted this debt into, suppose earlier it was an unsecured convertible debenture, but now they have issued some secured convertible debentures. The unsecured convertible debenture, that was the antecedent debt. And now this issue of secured convertible debentures is the preferential payment. So it will be covered under the preferential transaction or an antecedent other liability owed by the corporate debtor to such person.
वाटरफॉल मैकेनिज्म में बेटर पोजीशन पे आने पे ही ये सेक्शन अट्रैक्ट होगा, राइट सर?
यस, बिल्कुल 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 बिल्कुल. अगर if the waterfall mechanism is not changed, then it has no effect. No, it has no effect basically. So there is a transfer of property, there is a transfer of interest, and it puts these creditor, surety or guarantor in a beneficial position. Putting such creditor or surety or guarantor in a beneficial position, then it would have been in the event of a distribution of. अगर कोई change ही नहीं हुआ, इसमें क्या हो रहा है? Unsecured को secured बना रहे हो. Operational को you are making financial. You are giving more security without taking anything extra. So these are the preferential transactions. So first of all, you have to identify the transfer of property or interest. So what is the transfer of, what is the property? Because it has to be reversed back also. If you complain to the adjudicating authority that, okay, this is the preferential transaction, then they have to reverse the effect also. So there, you first of all, you have to prove that there was a transfer of property or there was an interest of CD which was transferred. And this transaction was with creditor, surety or guarantor. And there was some pre-existing financial or operational debt or other debt. And such transfer has put the creditor, surety or guarantor in a beneficial position vis-a-vis the waterfall mechanism. So these are the steps. Who can find? Resolution professional or liquidator. You will file an application under section 43, subsection 1. Related party 2 years, other 1 year. Yes, please. हाँ जी, पूछिए. वैभव गुप्ता जी पूछिए. सृष्टि गर्ग जी पूछिए. You can ask now.
सर अगर रिलेटेड पार्टी है,
हाँ.
रिलेटेड पार्टी क्रेडिटर है,
ठीक है.
तो उसको पेमेंट पहले कर देते हैं, वो प्रेफरेंशियल पोजीशन में तो कभी नहीं आएगा, क्योंकि रिलेटेड पार्टी को वाटरफॉल मैकेनिज्म में शेयर होल्डर है. सपोज शेयर होल्डर है, उसने लोन भी कंपनी को, शेयर होल्डर और डायरेक्टर कम डायरेक्टर है, कंपनी को लोन दे रखा है, बट उसने क्या करा, 2 साल आईबीसी का अभी इंसॉल्वेंसी कमेंसमेंट डेट के 2 मंथ्स पहले
देखिए ऐसा है, मैं बताता हूं आपको. The related parties, suppose they have given a loan, then they are financial creditor. So suppose there is a director who has given a loan to the company. Of course, he has also got the right to get it back. It's not that he will not get his loan back. The only hurdle here is that he will not be in the committee of creditors, which is basically deciding the fate of the company, whether this crisis has to be resolved or it has to be liquidated. But he is as much a financial creditor as any other party. So definitely he will be at par with other financial creditors if he's secured or if he's unsecured. So depending upon that parameter, it's not that suppose a director has given a loan, then it will be put at the last. It's not like that. The only thing is that he will not be included in the committee of creditors.
Okay. Thank you.
I hope I'm clear.
Yes, sir.
हाँ जी. और वैभव जी, you are asking something?
मैं पूछ रहा था सर, अगर इसमें सिक्योर्ड को इंसॉल्वेंसी कमेंसमेंट या अनसिक्योर्ड को या सिक्योर्ड का एग्जांपल ले लें, तो सिक्योर्ड को एक बैंक ने ज्यादा प्रेशर किया और इंसॉल्वेंसी कमेंसमेंट डेट के पहले उसने कुछ पेमेंट कर दिया उसको ज्यादा,
हम्म,
पेमेंट ज्यादा कर दिया, मान लीजिए दो बैंक से 5-5 करोड़ के दोनों जगह लोन ले रखे थे, और एक बैंक ने ज्यादा प्रेशर किया उसको, तो इवन आफ्टर द टर्म्स,
नहीं नहीं
मतलब
नहीं, देखिए ऐसा है, वी हैव टू सी फर्स्ट ऑफ ऑल, we have to classify the parties with whom we have entered into transaction, whether it is a related party or unrelated party, है ना? In case it is a related party, then we can go back up to 2 years. In case of unrelated party, which is your case, है ना? Suppose it is a
right,
bank, so it's an unrelated party. So in
right,
unrelated party, if 1 year within the period of 1 year before the insolvency commencement date, so either we have given him some extra security, or we have paid him. We are actually, payment will not be covered in this, because he had got every right to get his dues back, to get his loan back. But suppose he insisted that I need some more security, and some more security was provided to him. Earlier, suppose one plant was mortgaged against the loan,
correct.
है ना? But
ठीक
now
है.
suppose 2 plants have been mortgaged to that person, so some additional security has been given. So in
Right.
this case, that additional security will be reversed, because that is also a preferential payment. It need not be in money terms only. Even if you are creating additional security without securing new value, then also it is a preferential term, because now he is in a beneficial position. Because as per section 52, he can opt to realize his security on his own. So had this transaction not been done, he would have been left with lesser security, but now he's enjoying more security. So this is also preferential transaction. I hope I'm clear on this.
Yes.
Now let us see what are the different parameters, how we can see whether these transactions are preferential or not. In this case, what you have done is repayment to unsecured loan to promoter during the look back period while the debt of secured creditor is outstanding. Instead of paying to secured creditor, you paid the unsecured loans to the promoter. So it is a preferential because you have altered the preference. Some old operational creditors was there other than regular business payments against supply of goods or services, while the debt of secured creditors or unsecured financial creditors are outstanding. This is preferential. So anything by which you are changing the line. So there is a particular set of line as per section 53. All persons are standing in line. If you change the queue, then it is a preferential transaction. Payment to an unsecured financial creditor while the debt of secured creditor is still outstanding. This is also preferential. But if you are paying to workmen and employees in the regular course of business, that is not a preferential transaction. This is an exception also to section 43, because section 43 exception, what it says, other than by reason of being an employee. It says a preference shall be deemed to be given if it is given to a related party other than by reason only of being an employee. So if you are paying wages or salaries to them, that is not a preferential transaction. If you are paying any tax against the order of any authority or payment of regular taxes, this is also not a preferential transaction. Then you are paying old tax dues where there exists a risk of prosecution without any order from a court or authority. So this is deemed to be a preferential transaction. Payment to a secured creditor in priority while the debt of other secured creditor is outstanding. Payment of secured debts against which the property of the directors is mortgaged would be considered as preferential transaction. Suppose the company has taken 2 types of loans. One are secured against the property of the directors, another are secured against the property of the company. And you are paying those secured debts first, which are mortgaged against the property of the director. This is deemed to be a preferential transaction. You are adjusting, you are offsetting the debit balances with credit balances of other parties. That's also a preferential transaction. This example I gave, allotment of flats or plots by a real estate company to suppliers of goods or services before the CIRP. This is also a
तो
preferential.
7 पॉइंट में तो बहुत सारे केसेस कवर हो जाएंगे.
हाँ बिल्कुल
ऐसा
होता ही है,
ऐसा
होते ही
होता
है,
ही है.
बिल्कुल होते हैं, हाँ होते ही कवर. हाँ तो almost in every CIRP, applications are being filed. Because once you file the application, at least you are sure that no disciplinary action will be taken against you. Because suppose if somebody else reports and you are not reporting the transaction, then you run the more risk.
But even if the application is filed, is that a public document for all the creditors?
No, it is not a public document. Basically, it is an adjudication process. So you file the application with the adjudicating authority. Adjudicating authority will call for documents, first of all, from the party who has filed this petition for avoidance of these transactions.
Mhm.
Suppose a creditor files, then they will ask for the documents from the person on which documents he is relying.
Okay.
Any property transferred in connection with the giving of the preference to be vested in the. So what is the relief? Basically, reversal of the transaction, release or discharge, etc. Undervalued we know either for free or at a value which is less than, which is significantly less. And how they will assess? The adjudicating authority may require an independent expert to assess the value of the transaction, because its value is also a relative term. So what they will do is they will require an independent expert to assess the value of the transaction, because value goes on changing also. Then relevant time, again 2 years, 1 year. Who can find? RP liquidator. And creditor, member or partner can also apply in case it is not been reported by the RP or liquidator. So in this case, application will be filed under section 47(1). Undervalued transaction, you are selling luxury cars owned by the CD to related parties or unrelated parties at a value which is much less than the market value of the car. So there is an Audi car, the market value is 30 lakhs, you are transferring to relative of director, say for 10 lakhs. So it is an undervalued transaction. Sale of paintings, archaeological, to related or unrelated at a value which is much lower. Transfer of shares of subsidiary companies at a price which is less than the actual value. Purchase of any asset at very high value to keep the funds of the corporate debtor away from creditors. So in this case also, what you can do is you can purchase also. So you might have purchased a property, say worth, it was worth 50 crores at 100 crores. So this is also an undervalued transaction. Sale of inventory at lower value as compared to actual value. So you are selling your inventory at, so either you are purchasing at high value or you are selling at lower value. Both involve transfer of funds. Relief, naturally reversal of the effect. If any security interest was created, then that is also reversed. Then transaction defrauding the creditor deliberately. So the intention here is important. In this preferential, no intention is there. Preferential transaction might be done innocently, undervalued also. But in this case, section 49 transactions, undervalued transaction defrauding the creditor. So the intention is to defraud, deliberately entered for keeping the assets beyond the reach. So in this case, there is no look back period. So in this case, the adjudicating authority may, on the application of the RP, pass an order that any person who were knowingly parties to the carrying on of the business in such manner shall be liable to make such contribution to the assets of the corporate debtor as it may deem fit. Sometimes they do some fraud on the company. Say they are doing some fictitious billing. They are entering into the system bills for purchase, and they are showing some payment also. So this is something which you are doing to defraud the creditors. Section 66, it talks of fraudulent trading or wrongful trading. So in this case, when the transaction has taken place before the insolvency commencement date, when the director knew or ought to have known that there was no reasonable prospect of avoiding the commencement of CIRP, when the director knew that the CIRP is soon going to commence, and such director or partner did not exercise due diligence in minimizing the potential loss to the creditors of the corporate debtor. So in this case, he will be deemed to be guilty of fraudulent trading or wrongful trading. What are the common examples of fraudulent transactions? Any transaction with the objective of keeping the asset or property of the corporate debtor away from the creditors. He knew that soon CIRP is going to commence, so he transferred the assets just prior to the commencement of CIRP. Manipulation in the books, use of forged documents to obtain sanction and disbursement of credit facilities, bogus exchange bills, sales bills for discounting, export and import bills for discounting. Because had the transactions been genuine, so some goods must be available, some inventory must be available, but because these were fictitious bills, so no inventory is available. Falsification of books of accounts by recording fake transactions of sale and purchase for obtaining increased credit facilities from banks. Falsification of books by making entries of bogus expenditure for diversion of funds. You are giving lease rent of say 20 lakhs to your sister concern, whereas the market value is 5 lakhs only. So that is also booking of bogus purchase, bogus expenditure. Falsification of books of account with the objective of increasing in the value assets of the corporate debtor in books of account for renewal, additional credit facilities from banks. So you are showing some assets which are not there in actuality. You are increasing the inventory, you are inflating the inventory. Siphoning of inventory stock by showing increased consumption. Siphoning away funds of the corporate debtor by resorting to bogus transactions. Fraudulent removal of property. Undervalued transaction with fraudulent intent, causing loss to the security interest for unknown gain to management. So these are some of the examples of fraudulent transaction. So in this case, any person who are knowingly parties, they will be liable to make the contribution. Suppose a director, he did this transaction, he will be held personally liable. So the director or partner in this case, they will be liable to make such contribution to CD if such director or partner knew or ought to have knew that there was no reasonable prospect of avoiding the commencement of CIRP, and such director or partner did not exercise due diligence in minimizing the potential loss. So in this case, if the director or partner is at fault, they will be liable to make good the loss. Extortionate transaction, here also period is 2 years or 1 year. Terms are exorbitant or unconscionable under the principles of law relating to contracts. So any reasonable man will not enter into such transactions. So these transactions are extortionable. So not applicable in case of debts extended by any person providing financial services, as I gave the example of a credit card company. So these are some of the examples you can go through. Relief, almost same. Now let us do a case study. I think all these you can go through on your own. So let me start with a case study. These are the various case studies I have given. Let us see this case study. ABC Limited having 3 directors, A, B, and C, they had taken a loan of 100 crores from National Bank. On default of 4 EMIs, National Bank filed an application under IBC. Ramlal was appointed as IRP and he made a public announcement of CIRP on 5th of September. He was later confirmed as RP. Now, while he is going through the books, he observed that the following transactions appear to be PUFE transactions. First is first transaction. C, who happened to be the daughter of director B. So this is the relative of director. So it is a related party.
इसको फुल स्क्रीन मोड में कर दीजिए प्लीज, तो हम लोग भी पढ़ सकें।
हाँ, बिल्कुल बिल्कुल। वैसे मैंने शेयर किया हुआ आपके साथ। हाँ जी, Now it is better, I think. Huh? So C, who happened to be the daughter of director B. So there is a director of the company and C is her daughter. Okay? So it's a related party. Had taken a residential loan. So first of all, what you have to see? You have to see the parties between which transactions are taking place, whether they are related or unrelated, because look back period is different. So in this case, C is the relative. Had taken a residential loan and ABC Limited had given a guarantee towards the loan. This company, which is under CIRP, because ABC is under CIRP, now they had given a guarantee towards the loan. Some of the installments were paid directly to the bank through company's account by debiting B's account, B's loan account. Now, B is a director. He has got some transactions with the company. So what ABC is doing? ABC is paying the loan which is taken by the daughter of B, and the amount is being debited to company's loan account. It is not that whether the amount has been debited, but the thing is that the in it is a transaction with a related party. Suppose this transaction had not been done, then some stakeholder must have been entitled to these funds. But because these funds have been taken away from the company, so it is a preferential transfer. Transaction 2. Besides this, ABC Limited had taken unsecured loan of 25 lakhs from ABC Consultants LLP, in which A's father was a designated partner. So again, we have to go to section 5, subsection 24. So first transaction is with a relative of the director. C is a relative of the director. Now in this second transaction also, first of all, we have to see whether it is a related party or not. ABC Limited had taken unsecured loan of 25 lakhs from ABC Consultants LLP. So it's a LLP in which A's father was a designated partner. So these three are the directors, A, B, and C. Now A's father is a designated partner in the LLP. And this ABC Limited, it has taken unsecured loan from ABC. So ABC Limited has taken a loan from an LLP in which director's father, director's relative, you have to read it, director's relative is a designated partner. During past 2 years, EMIs of rupees 5 lakhs had been paid to ABC Consultants LLP. So now this is a transaction with a related party. And where it will be covered? It will be covered in a limited liability partnership or partnership firm in which a director, partner, or manager of the corporator or his relative is a partner. Now transaction number 3. ABC Limited had also ventured into real estate business. XYZ Estates had supplied raw materials towards construction of a residential tower. There was an arbitration clause in the agreement between ABC Limited and XYZ Estates. By virtue of arbitration clause, ABC Limited agreed to offer a residential unit to the partner X of XYZ Estates. Now, this supplier of raw material is an operational creditor. Now you have agreed to offer him a residential unit. So it means you are changing the nature from operational creditor to financial creditor. He was an operational creditor, so he was lower in priority as per section 53. Now, by making him a home buyer, by allotting him a residential unit, you have changed the priority of payment in as per section 53. Although it is not a related party. So here it is not a related party, but the character has changed from operational creditor to financial creditor. Ramlal appointed Mr. Mukul, his paternal grandfather's son, as a forensic auditor. So paternal grandfather's son means father. Grandfather's son is father. As a forensic auditor on a consolidated remuneration of 10 lakhs. Ramlal who? Who is Ramlal? Ramlal is IRP. So he has appointed his father as a forensic auditor. Just a minute. Oh. So Ramlal has appointed, Ramlal is an IRP. He has appointed his father as a forensic auditor on a consolidated remuneration of 10 lakhs. Mr. Mukul, after conducting the forensic, gave the following observations. Now, ABC Limited had done some jugglery in the books of its real estate division. So now this transaction number 4, suppliers worth rupees 2 crore were found non-existent. Sometimes what they do, they introduce fictitious bills just to take away the payment from the company. So suppliers worth rupees 2 crore, they were found non-existent. These bills pertain to E, a suspected trader engaged in fake billing. However, payments have been made by creating the account of Z, who was a genuine trader, as per the instruction of E. So as per the instructions of E, हाँ जी बोलिए सर प्लीज, बोलिए बोलिए वैभव जी, हाँ और उदित जी, नाउ यू कैन आस्क, कुछ पूछना है क्या आपको? आप अनम्यूट कर सकते हैं अपने को। हाँ जी
नहीं
वैभव
सर,
जी,
नहीं सर, नहीं सर,
ओके
मैंने तो
अच्छा, वो कई बार वैसा हो सकता है, कोई बात नहीं। और उदित जी, यू वांट टू आस्क समथिंग? हो सकता है पहले से, कई बार गलती से भी उठ जाता है, कोई बात नहीं, नो इश्यूज। हाँ जी, तो इसमें क्या हुआ कि सप्लायर्स, इसमें 2 करोड़ के बिल दे आर फाउंड टू बी नॉन। उदित जैन, यस प्लीज, उदित जी पूछिए, यू कैन अनम्यूट योरसेल्फ, यस। या तो गलती से ही उठ रहा है, आप अनम्यूट तो कर नहीं रहे अपने को, या आप कर नहीं पा रहे हैं, पता नहीं क्यों, क्या कारण। एनीवे, सो यू कैन आस्क इन द चैट बॉक्स ऑल्सो, अगर ऐसा कुछ इशू है तो।
सर,
हाँ पूछिए पूछिए।
सर इससे पिछली वाली स्लाइड में आपने जो मुकुल वाला एग्जांपल दिए थे, वो खोलेंगे सर? बैक करेंगे
हाँ
slide को?
खोलते हैं, हाँ एक मिनट अभी करता हूँ ये, एक मिनट।
नहीं, आवाज आ रही है।
एक बार करना सर, बैक करना सर।
हाँ 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 जी, हाँ जी,
सर इसमें आपने, इसमें जो लास्ट लाइन थी उसमें था रामलाल हैड अपॉइंटेड मिस्टर मुकुल हिज paternal grandfather son as forensic auditor on consolidated terms of 10 lakh. Mr. Mukul after conducting the forensic audit gave the following observations. तो सर ये observations किधर है सर? ये observations और इसको conclude नहीं किया आपने।
यही तो observations है ना, यही observation है कि ये अगली जो ये observations है।
अच्छा, फिर यहाँ लिखा हुआ था ना ABC has done some, अच्छा ठीक है सर, ये observation, ठीक है ठीक है ठीक है,
यही observation है ना,
ठीक है ठीक है, इसको कंक्लूड करना सर, इसको करके एक बार।
हाँ 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 बिल्कुल बिल्कुल, हाँ जी। तो इन्होंने क्या किया, ट्रांजेक्शन नंबर 4, सप्लायर्स ये नॉन एग्जिस्टेंट थे, दीज वर, है ना, तो दीज बिल्स पर्टेन टू ई। नाउ ई इंस्ट्रक्टेड कि भाई यू मेक पेमेंट टू जेड, जेड इज अ जेन्युइन ट्रेडर, ठीक है, जेड हैड एक्चुअली सप्लाइड गुड्स टू ई, ठीक है। पेमेंट्स वर्थ 1 crore वर डन ड्यूरिंग जून एंड पेमेंट्स वर्थ रुपीज 1 crore वर डन इन October 2022. So you have to see the timing of transaction also. June 2022 and October 2022. And this CIRP has commenced on September 2022. Acha. Besides this, suppliers worth rupees 3 crore agreed that the actual supply was only 1 crore. Sometimes what happens is, so part of the supply is genuine and part of the supply is fictitious. So billing is of 3 crores, but actual supply is of 1 crore only. And 2 crore was given back as cash to the son-in-law of Director A. These are the observations of forensic auditor. Income tax department and GST department had also initiated proceedings against ABC Limited for income tax evasion and GST evasion. Then transaction 6, the demands raised by the income tax department and GST department are 2 crore and 1 crore respectively. Transaction 7, ABC Limited was also into mining business. The forensic auditor observed that ABC Limited had entered into a royalty agreement with a local mining contractor. Royalty was payable at the rate of 10% of the value of minerals extracted on a lump sum basis. Now, ABC Limited has specifically stated in the royalty agreement that any liability accruing to third party shall be to contractor's account. The mining contractor had defaulted on PF dues of the labor engaged at the site. Total PF dues were 50 lakhs. But because the royalty agreement specifically state that liability accruing to third party will be to contractor's account, so this PF dues liability is not of the company. Besides this, the royalty, which was earlier 10%, it was drastically reduced to 3%. And the reason given was that the extraction of minerals in the mine had gone down drastically. So from 1000 tons, it has gone to 600 tons. So it means the extraction has gone down to 60%, but the payment has gone down from 10% to 3%. So sometimes what happens is they reduce the payout officially, but unofficially they may be taking 3% cash. This is the transaction. So these are the various types of transactions. Now let us see what is to be done in this case. So first of all, you have to see whether C, daughter of B, is a related party. Yes, because director's daughter. ABC Consultants Limited, whether related party. Yes. And you can write the related clause and subclause also of section 524. This PPT I have shared, so accordingly you can write. XYZ Estates is a related party. I don't think it's a related party. It was simply an operational creditor which was turned into a financial creditor. So this is not a related party, but the nature of transaction has changed from OC to FC. Mr. Mukul, grandfather, son of IRP? Yes, because it is IRP is IRP's father. Although it might not come specifically under the related concept of related party, but a resolution है
इनको कैटेगराइज करने का फायदा नहीं है ना कुछ.
हाँ ठीक है, इसको नहीं करते फिलहाल. हाँ, बट ये है कि एज एन IRP यू कैन नॉट अपॉइंट योर रिलेटिव्स एज ए प्रोफेशनल. अच्छा, are there any transactions where we don't have to see whether the parties are related or not? In which case we have to see whether we don't have to see whether it is a related party or not. So what are those cases? What are those transactions? In case of fraudulent transactions or transactions defrauding the creditors, as which are covered under section 49, we don't have to see whether they are related party or not. वहां पर हमें देखना नहीं है. प्रेफरेंशियल में हमें देखना है, अंडरवैल्यूड में वी हैव टू सी, बट इसमें हमें नहीं देखना है. एक्सटॉर्शनेट में भी देखना है हमारे को. बट ये जो 49 वाला है, ट्रांजैक्शन डिफ्रॉडिंग द क्रेडिटर्स, वहां पर हमें नहीं देखना है कि रिलेटेड पार्टी है या नहीं है. तो डज द फैक्ट ऑफ पब्लिक अनाउंसमेंट हैव एनी इंपैक्ट ऑन द ट्रांजैक्शंस डन इन गुड फेथ एंड फॉर वैल्यू? पब्लिक अनाउंसमेंट का कुछ इंपैक्ट होता है क्या?
तो कौन सी पब्लिक अनाउंसमेंट जो हम लोग
जो CIRP के
करते हैं?
हाँ CIRP, हाँ, उसका कोई इफेक्ट होता है कि पब्लिक अनाउंसमेंट के बाद क्या होगा, पब्लिक अनाउंसमेंट से पहले क्या होगा? Actually, in case of transaction, let us see section 49. I hope all of you are having copy of the compendium. If you read from 2.1.200, page number of the compendium, it says that an order under section 49 will not affect any interest in property which was acquired from a person other than the corporate debtor and was acquired in good faith for value and without notice of the relevant circumstances or affect any interest deriving from such an interest. So if it says without notice of the relevant circumstances, it means that without any public announcement, because public announcement is deemed to be a notice to everyone. If a public announcement has been made and if a transaction has been made thereafter, then the party cannot take the plea that he did not have notice of the relevant circumstances. So wherever the words notice of the relevant circumstances have been used, so we have to see whether public announcement has been made or not. So this is the impact actually. So if public announcement is made, then you cannot raise this plea that, okay, I did not have notice of the circumstances. So whether transfers effected pursuant to a court order are excluded from the ambit of preferential transactions, this I think we have already discussed. So even if a transaction, even if a transfer has been effected pursuant to a court order, that can also be termed as preferential transaction. So such transactions are not excluded.
सर
And
सेकंड पॉइंट फिर से समझाइए प्लीज.
कौन सा?
ये पब्लिक अनाउंसमेंट वाला मतलब हाउ डज इट इम्पैक्ट, ये नहीं समझ में आया मेरे को.
हाँ, पब्लिक अनाउंसमेंट में ऐसा ना, इफ वी गो टू सेक्शन 49, in section 49 what it says, in transaction defrauding the creditors, it says what type of transactions are not covered, what type of transactions will not be affected, because the adjudicating authority will restore the position. But there is a proviso. Proviso says, provided that an order under this section, that means under section 49, will not affect any interest in property which was acquired from a person other than the corporate debtor and was acquired in good faith for value and without notice of the relevant circumstances or affect any interest derived from such an interest. So the important point here is without notice of the relevant circumstances. Suppose CD transferred to X and X transferred to Y. So this, by virtue of this proviso, Y is being protected. But Y will not be protected if there is a public announcement. Because then he cannot raise the plea of without notice of the relevant circumstances. क्योंकि डायरेक्टर्स भी तो चालाक होते हैं ना, वो डायरेक्ट तो करेंगे नहीं ट्रांजैक्शन, डायरेक्ट करेंगे तो ट्रांसफर हो जाएगा. इसमें क्या दिया हुआ है कि इफ इट इज डन टू ए थर्ड पार्टी, भाई वेयर इज द इम्यूनिटी ग्रांटेड against transfer? Immunity is granted to a person who has acquired this property from a person other than the CD. तो CD क्या बोले, CD क्या करेगा, CD एक को ट्रांसफर करेगा, वहां से दूसरे को ट्रांसफर करेगा, वो भी यहां पर it will not be protected by virtue of this provision. I hope I am clear.
ठीक है सर.
अच्छा Udit ji, I can make you co-host, no issues. If you are not able to unmute yourself and you want to ask anything, because I tried to unmute you, but पता नहीं क्यों नहीं unmute हो पा रहा आपका. हाँ जी. So definition of property has to be taken from Transfer of Property Act, General Clauses Act. अच्छा रामलाल, I think we can continue it tomorrow. आज थोड़ा सा हल्का रखते हैं, let us keep it light, है ना? So you can go through this entire study material which I have shared it with you, and we will discuss some more case studies tomorrow on PUFE transactions. Tomorrow I think we will be able to complete it. In case you have any questions, you can ask.
हेलो
हाँ जी पूछिए मनीष
सर,
जी.
थोड़ा सिलेबस बताना सर, क्या सिलेबस है, कितनी पॉइंट का है सर, क्या है थोड़ा सा रहता.
अभी बता देता हूँ मैं.
हाँ जी सर.
हाँ एक मिनट.